The question is, why would anyone pay 54 times PE for a car company? I hope you enjoyed my other video about Ferrari. The 7 things that you didn't know about the company, or the 7 things you should know about the company. In the second part, I wanna focus on Ferrari from an investor's perspective, including the 5 most important teams. If you didn't know, actually, the stock is a 10 backer since the IPO in 2015. It's also insane that the company has sold during its entire history less cars than Porsche produces in 1 year. Still, Ferrari is roughly valued double the valuation of Porsche. And before we dive in, of course, I have to say that all the data and graphs in this video come from my beautiful Excel model that is available on my website. And this video is not investment advice and is only for informational and educational purposes.
Number 1. Order book.
The question is, why would anyone pay 54 times PE for a car company? And this is forward PE, not the trailing 12 months. One of the reasons, the order book. Already at the end of 2024, Ferrari had an order book that was covering the whole 2026, which makes the business very predictable. And we know investors, they love predictability and hate uncertainty. When Ferrari launched Purosangue, its first ever SUV, in September 2022, already in the first half of 2023, they were collecting the final orders for year 2026.
Crazy.
Number 2. Revenue growth.
Over the past 5 years, Ferrari has achieved an annual revenue growth of around 12%, or 16% over the past 3 years. Half of that revenue growth has come from higher volumes, that is, delivering more cars, but the rest from higher prices. While in 2024, Ferrari decided to keep its volumes roughly at the same level as 2023. I mean, the company always sells less cars than the market demand. The company was still able to achieve a revenue growth of nearly 12%. And that's because of higher prices. And the new supercar F80 that will come out later this year, the starting price is an astonishing $3.1 million.
Number 3. Earnings growth.
So number 1, strong order book. Number 2, strong revenue growth.
Wow!
But Ferrari has also been able to grow earnings faster than revenue. How come? Personalization or customization? Sure, the company's car's base price, well, it's quite high, has been going up. But more and more people are willing to personalize their Ferraris. Think about special paint or materials or the carbon finish, you name it. In addition, Ferrari has increased the price for the customization, actually quite a lot. And when they release the new SUV, you can think about that they have the back seats as well. So seats in the front and seats in the back. That means more things to customize. And what does that mean? It translates into higher profits.
Yes! Number 4. Total addressable market.
The launch of the first ever SUV, that was a success, no doubt. When the car was launched, even the management team was overwhelmed by the huge demand. In Q4 2022 conference call, the management team said, "The Purosangue order intake has been extraordinarily high, well beyond our expectations. There are about 1.3 million luxury SUVs produced per year, or 35,000 super luxury SUVs. And this is the market where Ferrari has been able to push." And do you know what's going to happen in Maranello in October? Ferrari is about to showcase its first ever electric vehicle. Actually, mark the day in your calendar, the 9th of October. Is Ferrari able to push into another new segment successfully? Probably, yes. It will actually be super interesting to hear the sound without a combustion engine.
Number 5. Valuation.
Predictability, higher volumes, higher prices, higher margins, new segments. I mean, what's not to like?
Woohoo!
But many investors and analysts, they have been struggling with their ever-expanding multiples since the company's 2015 IPO. I can remember at first, the investors, they had a ceiling kind of 20 times PE for an auto company, even though it was a special auto company. Typically, we know auto companies, they trade at around single-digit multiples. In 2017 to 2018, the stock began to test 30 to 40 times PE ratio. Following the death of CEO Sergio Marchionne, by the way, I miss his webcast so much, he was great. The stock came back to 25 times earnings. Then COVID-19 came. Ferrari proved itself as a highly resilient cash machine, and we got back to 40 times or even to 50 times range. Today, we have more or less achieved parity with Hermes. The question is where to go from here. I'm almost certain that the multiple can't expand. I mean, it's 54 times forward PE. Thus, going forward, pretty much all the shareholder returns are likely to come from the company increasing its earnings. Ferrari covering the whole order book for 2026, new EV coming out. I see no reason why the company wouldn't be able to grow its earnings by double digits for several years ahead. Despite the fact that 2025, it will be kind of a transition year before the supercar F80 will hit the market later this year. It's just that when you pay this multiple, even one setback and it doesn't look pretty. What if the EV, for example, in October will be a disappointment? Or what if the higher level of personalization or customization will surprise Ferrari owners in case they would like to sell the cars to other parties and they don't get paid as much as they would like to? Would the level of personalization decrease, which at the end would hit the margins? Also, well, we know DCF, it's a DCF. But if you check my Excel model, the current valuation of around 90 billion euros is justified if the company can grow its revenue by 10% a year until 2040 and achieve an EBIT margin of 30% for the rest of the company's history. I have assumed the terminal growth rate of around 3% beyond 2040. I mean, I love the company. I'm very eager to see the new EV in October. I wish I would be in Maranello 10.
Well, maybe I will.
But if you are not a shareholder already, it's tough to buy into the share given the current valuation. Just my thoughts.